First, the Reserve Bank's early Christmas present, slashing the official cash rate by 100 basis points to a 7-year low of 4.25%. It's the fourth cut in as many months, saving homeowners almost $200 a month in repayments on an average mortgage of $300,000. But as Ben McCormick reports, not everyone will benefit.
How do you feel every time the news comes on and you hear that the rates have been cut again?
I feel quite sick.
Most of the big banks have been quick to pass on the Reserve Bank's interest rate cut of 1%.
Now sits at 4.25%.
It's really frustrating.
The banks have just got to be held accountable for this. It's unconscionable the way they're behaving at the present moment.
Sits at 4.25%, the lowest rate in 7 years.
Well, for the 60,000 Australians who locked in, it's a bitter blow because they're missing out on the fastest reduction of interest rates Australia's ever seen.
It's the lowest level since mid-2002.
Another day, another interest rate cut. Great news for most Aussie mortgage holders who will now have an extra $500 to spend this Christmas that they didn't have 6 months ago. But spare a thought for the other 60,000 mortgage holders who won't be feeling so merry. They were the ones who were unlucky enough to lock into a much higher fixed rate earlier this year. For them, every time the Reserve Bank slashes interest rates, it's like rubbing salt into a wound.
I'm horrified. I just can't believe that they can do that.
Cheryl Sayer is one of those caught out by this interest rate trap.
It feels like the Grinch has stole Christmas because, you know, the rates are going down. It would cost us probably $20,000 if we went to ING today to ask them to swap it over to a variable rate.
After buying her family home with a mortgage from ING Direct, Cheryl was hit with rate rise after rate rise. So she decided to lock into a fixed rate in June, 9.12%. It was a big mistake. Today, Cheryl is paying $300 more than if she'd stayed with the variable rate, unless she pays ING Direct an exit fee of $18,000.
It's devastating. It's financially devastating for us as well because we only live week to week. My husband and I, we just pay our bills as we go because that extra $300 a week could make life a little bit easier for us.
Well, at the moment we think we're looking at something in the vicinity of $35,000. If we go in tomorrow, it could be $50,000.
Rod Sodaro is also facing a huge break fee if he opts out of his fixed rate with the Commonwealth, which is set at 9%. Today's interest rate cut means he's paying an extra $1,000 each month.
When we first took out the loan, there was no indication that the fees would be anywhere near this. Our understanding was that it cost us a couple of $100 to get into it, and that the intimation to us was that it cost us a couple of $100 to get out of it.
Laura Zhang is about to move into her first home. She also locked in at 9%, but with ING, which now wants to charge her $15,000 to break out.
I am disappointed that I'm losing that $15,000 that could benefit my house, my renovation, and that's a lot of money. So, yeah, just very disappointed.
Well, a lot of people who locked in on fixed rates are really hurting now because interest rates are crashing and they're going to continue to fall.
Journalist Stephen Mayne campaigns to keep the banks honest. He says lenders haven't been upfront with their customers.
The banks didn't properly tell all these people that the more interest rates fell, the higher the fees would be to get out of the loan. So when the banks were marketing these loans, they knew that they carried none of the risk.
They need to be a lot more clearer on their conditions of a fixed loan rate.
We've got a 16-month-old baby. We were hoping to have the Christmas here. It's looking like being a pretty bleak Christmas one way or another.
And it looks like it's going to be even bleaker. Late today, Rod went to the Commonwealth Bank to pay the $35,000 exit fee, only to be told it's now $51,000.
In the space of not even 6 hours, and it's gone up $16,000. $16,000. I've got to work, I've got to earn $32,000 before I can even pay that off.
Well, I think the ACCC and APRA should be having a good look at just precisely what the banks told their customers about the penalty fees to break these contracts. And if someone had been told if interest rates halve, you'll be up for 30 grand, I reckon there's no way they would have signed these contracts.
They're just scum. They are just vermin as far as I'm concerned. Absolute vermin. Lying vermin. Do not bank with these people.